Welcome back to EconVerse for your weekly digest. Yeah, it's been a pretty wild week in the global economy, wouldn't you say?
Absolutely. Tariffs, currencies, interest rates. Oh my.
Right. So much going on. Let's just dive right in, unpack some of these big headlines.
Sounds good to me.
Okay, first up, Trump's tariffs. He's imposed a 10% tariff on Chinese imports.
And potentially a 25% tariff on Canada and Mexico even.
It's huge, right? And the markets, well, they're reacting pretty dramatically, shall we say.
For sure.
So the Canadian dollar, well, it just plummeted to a 20-year low.
Wow.
And the Mexican peso, well, that's been fluctuating like crazy. And even the euro, it's feeling the pressure too.
Yeah, the EU is definitely worried they might be next on Trump's list for tariffs.
A lot of uncertainty for sure.
Yeah, and you know what happens when businesses get uncertain, right?
What's that?
Well, they hold back. They hold back on investments. They put hiring freezes in place.
And ultimately, it slows down economic growth for everyone.
Exactly. Plus, some analysts are predicting major profit losses for the auto sector.
Especially in the U.S.
Right. Higher car prices, potential job losses. Not good.
It's a real domino effect. Now, one thing I found interesting is how China's yuan has actually remained stable despite all of this.
Yeah, it is surprising, isn't it? Makes you wonder if they're strategically using currency reserves to counteract the tariff's impact. We'll have to wait and see how that plays out.
Definitely something to keep an eye on. Okay, let's shift gears a bit and look at the Eurozone. They actually had a bit of good news this week.
Oh.
Yeah. After 2 months of contraction, their economy bounced back in January.
That's great.
Their PMI, their Purchasing Managers Index, well, it climbed above 50, which, as you know, signals growth.
That is positive news, but I do want to point out that this growth was largely driven by services. Manufacturing is still lagging behind a bit.
So not a complete recovery just yet.
Not quite. Plus, they've still got those looming U.S. tariffs hanging over their heads, adding to the uncertainty.
Right. But there is talk that the EU might actually retaliate using this tool. It's called the anti-coercion instrument.
Interesting. Yeah, that's a relatively new trade tool the EU has that lets them respond to what they view as economic coercion.
And they could potentially target some big industries with this, like big tech. So that's definitely something to watch.
Agreed.
Okay, let's zoom out now and do a super quick scan of some other big economic headlines from around the world.
Rapid fire round.
You got it. First up, Canada. Unemployment dropped for the second month in a row.
That's good.
It is, but their overall employment rate is still pretty high.
Yeah, still recovering from the pandemic, and, well, those potential U.S. tariffs don't help.
Next up, China. New loans surged in January, but they still fell short of last year's record.
Could that be a sign of slowing credit demand, maybe? Uncertainty making people a bit hesitant?
Possibly. Okay, next, Mexico. Inflation's cooling down there. Good news for consumers. And their central bank actually cut interest rates faster than expected.
Interesting. Cutting rates can stimulate growth, but it's a balancing act because it can also fuel inflation if they're not careful.
It's a tightrope walk, for sure. All right, quick stop in South Africa. Their currency, the rand, actually strengthened a bit in response to, believe it or not, Trump's shifting positions on tariffs.
Showing just how interconnected the global markets really are. Everything's tied together.
For sure. Next, India. Their central bank slashed interest rates. First time in 5 years.
Wow, a big move to try and boost their slowing economy.
Big move indeed. Now, the Bank of England, well, they just cut their growth outlook for the year in half and slashed interest rates even further.
Not exactly painting a rosy picture of the UK economy right now.
Not exactly. And last stop, Turkey. Their central bank's sticking to their data-driven approach, even though they recently cut rates, but they also increased their year-end inflation forecast.
So they're trying to walk that fine line between supporting growth and keeping inflation in check. Tricky situation, for sure.
Definitely a lot to keep track of in the global economy. Okay, so now that we've covered the headlines, let's dive a little deeper.
Let's do it.
Okay, so let's bring in some expert analysis now. Deloitte has been putting out some really interesting insights in their weekly global economic update.
Yeah, it's a great resource for getting a bigger picture view.
Totally. So one of the things they point out is how even just the possibility of these U.S. tariffs is already having a real impact. Like, it's messing with financial markets, it's impacting global trade strategies.
It all comes down to uncertainty, Businesses need predictability, and these tariffs, well, they're throwing a wrench in everything. I mean, some businesses are even thinking about pulling out of China altogether because the risk is just too high right now.
It's a big deal, for sure. But, amidst all of this global uncertainty, Deloitte also points out that the U.S. economy itself, well, it's actually performing pretty well.
Yeah, they're saying high business confidence is driving that, and it's pushing equity prices up almost to record highs. So strange, right? All this global uncertainty, and the U.S. is, at least for now, kind of chugging along.
It makes you wonder how long they can last, though, especially if, these tariffs actually lead to a full-blown trade war.
Exactly. Okay, last point from Deloitte, and this one's a bit of a surprise. The Bank of Japan, the BOJ, they actually raised interest rates.
Yeah, that was a big one. First time in 17 years.
It caught everyone off guard.
Totally.
Yeah.
The thinking is they're trying to stabilize the yen. It's been weakening against the U.S. dollar. And a weaker yen, well, it makes imports more expensive, which fuels inflation. So raising rates is a way to fight that.
It's a bold move, for sure. But I guess it shows that they're feeling pretty good about Japan's overall economic outlook, right?
Yeah, it seems that way.
Okay, so we've got the World Economic Forum, we've got Deloitte, but wait, there's more. Let's go truly global and look at what the UN has to say. Their World Economic Situation and Prospects Report, WSP, it's always a great read.
Totally agree. WSP does a great job of looking at the long-term economic trends that are shaping the world, both good and bad. Okay, so their first big point, the global economy. Yeah, it's showing some resilience, but it's still not quite at pre-pandemic levels.
Yeah, that's a key point, I think. It's not all sunshine and roses just yet. The recovery's been uneven, and there are definitely some underlying structural challenges holding growth back.
So basically, still a work in progress.
Exactly.
Now, Wessospia also highlighted some pretty interesting regional differences. They're predicting slower growth for developed economies, but developing regions, specifically those in Africa and Asia, well, they're actually expected to improve.
It's a really interesting trend. Each region has different challenges and opportunities to consider, and it's fascinating to see how those factors play out.
Okay, so here's where things get a little, concerning. WESP warns that, LDCs, LLDCs and SIDs, all those least developed countries, landlocked developing countries, and small island developing states, well, they're facing some serious headwinds.
Yeah, WESP predicts that growth in those places is going to stay below pre-pandemic levels, which, well, if we're talking about achieving global sustainable development goals, that's a problem.
Definitely not good.
Yeah.
Okay, let's talk about inflation now. WSP says it's eased up globally, but, and there's always a but, there's still a big risk of it spiking again.
The big culprits that they're watching are potential trade restrictions and climate-related shocks.
Makes sense. It's a very volatile situation.
Totally. And the things that influence inflation, it's a complex web, Supply chain disruptions, government policies, even consumer behavior.
So many factors all tangled together.
Right. So WSP is basically saying, don't get too comfortable. Inflation is still a big concern for policymakers globally.
Okay, well, on a more positive note, WESP projects that international trade will bounce back in 2024. But of course, there are concerns.
Geopolitical tensions, rising protectionism. There are always those little rain clouds following the silver lining, aren't there?
Always.
What happens in one corner of the world, it impacts everywhere else. We're all connected, so keeping those lines of communication and cooperation open is really important for global stability.
I couldn't agree more. Okay, 2 more quick points from WESP, and then we can wrap up their analysis. They're saying global investment is starting to pick up, and a lot of that is being driven by strong growth in Asia. But high borrowing costs, and you guessed it, those pesky geopolitical uncertainties are still acting as a drag.
Yeah, investment is crucial for economic growth. But borrowing is expensive, and geopolitical risks make investors skittish. It's understandable.
Makes sense.
Okay,
last point. WESP notes that most central banks around the world, well, they're easing up on those aggressive interest rate hikes. The U.S. Federal Reserve and the European Central Bank are taking a more gradual approach now.
It's a delicate dance, right? Yeah. Trying to support growth, but not let inflation run wild. They're constantly adjusting, reacting to the latest data.
Talk about a high-pressure job.
Yeah.
Okay, so we've covered a ton of ground here, but let's not forget that all of this, these numbers, these trends, they impact real people.
It's easy to get lost in the abstract, but it's people's lives we're talking about here. Their jobs, their homes, their families.
Right, and the global economy impacts all of that. Well, folks, I think that about wraps up our deep dive into the global economy for this week.
We covered a lot, didn't we?
We did. Tariffs, trade wars, inflation, the rising cost of living, the energy transition, geopolitical risks. But hopefully it's given you some food for thought, some things to consider.
And hopefully you'll join us again next week as we continue to explore the fascinating world of economics.
Until then, stay curious, everyone.